how to get a mortgage loan if you have bad credit. Hey everyone, thanks so much for joining me. My name is Jeff Trevarthen. I am Jeff the Mortgage Pro. I really do appreciate you watching my videos here. If you like my videos, please make sure that you subscribe to my channel, as I try to put these out a couple times per week, and you can get more information and get alerted when these things are ready for you. And then if you like this video in particular, please make sure you hit the like button. I love to have this message get out to more people, especially in the current environment that we're in right now. I think mortgages are hard to do, and I'd love to help you do your mortgage and make it an easier process for you. So today what we're looking at is how to get a mortgage loan if you have bad credit. So let's define first what bad credit is. There's not really, I think, a very good definition of it. Some people think that a score below 700 is bad credit. Some people think that below 680 is bad credit. Some people think below 640 or below 600 is bad credit. I would constitute bad credit probably somewhere below a 620 credit score, and it's not really bad. We're just going to call it, we're going to call it not perfect, because I think that's a more PC term to go with. Okay, so not perfect credit is what we'll call it. Bad credit is just, saying that you're not very good at what you do, and I don't like that definition because I don't want to, pigeonhole anybody into their financial circumstances. But bad credit, there's a range of those different definitions for it, so we're going to call it not so good credit. Okay. Number two, the mortgage algorithm weighs two things very, very importantly when you are trying to borrow money for a mortgage, and this will help you improve your credit. So there's two things that we want to look at. Number one is the payment history. So as long as you make your monthly payments on time, you're probably going to have decent credit when you have the mortgage credit algorithm run to pull your credit scores from each of the three different credit bureaus. So on-time payments are absolutely one of the number one things that's weighted heaviest. I believe it's 30% of the weighting of the mortgage algorithm that's currently being used right now, which I think is a huge amount of weighting for just one particular category in how you manage your credit. So how does a late payment affect your credit score? So let's say you miss a payment. What happens is your score, your credit score, actually drops significantly immediately after that late payment is reported. And then it takes a long time to build up. It'll consistently get better and better over time as you get further and further away from that late payment. So it actually, if you had a late payment a couple years ago, it's not going to have that much of an impact on your credit score. But if you had a late payment last month, that's going to have a big effect on your credit score. So I want you to make sure that when you're managing your finances, that you always make your payments on time. And it just has to be the minimum monthly payment. You don't have to always pay it off every month. Ideally, that would be what you would do, but we want to make sure that we at least make the minimum monthly payment every single month on time. Okay. And then the second thing that's weighted heavily in the algorithm is the proportion of your credit balances to the actual credit limits. And what I mean by that is, like, if you have a $10,000 credit limit on one of your credit cards and you have a $9,000 balance on there, you're utilizing 90% of your credit, and we don't want to use that much. Ideally, we want to pay that off every single month. Okay. And if you can't pay it off every single month, we want to try to keep it under 30%. Ideally, that's going to still make sure that you maintain a pretty decent credit score. And then if you just can't get it under 30%, try to keep it under 50% at the very least. But we don't want it to go over more than a 50% credit utilization, because that's going to negatively impact your score. So do the best you can on those credit cards, especially to try to make those payments go down. With auto loans or fixed loans, you want to make sure that you just make your monthly payment on time. You can always try to accelerate those payments by paying more as well to get rid of that quote unquote bad debt, so to speak. But if you can't do that, just make sure that you make your minimum payment at least on those types of loans. The third thing you can do when you have bad credit and you want to still get a mortgage loan is just apply for a mortgage loan. And the reason why I say that is that a lot of us have special tools that we can use to help you figure out what we need to do. So we have two different things. One of them is called a what if simulator. And this says that if you were to, how do we get you from a 640 credit score to a 700 credit score? What would we need to do? And the what if simulator will say, okay, you need to pay off this balance and move this balance over here. And you need to, get rid of this one and then add this balance over here. And it'll tell you exactly what to do to get to a 700 credit score for each of the different credit bureaus, because they each monitor your credit just a little bit differently. And that's why you always have 3 different scores from each of the different credit bureaus. So a what if simulator is number 1, how we can help you after you apply for a mortgage. And number 2, it's like, if I have X dollars to spend, how high can I get my credit report or credit score to go up? So let's say you have $2,500 in discretionary cash that you can spend to help get your credit up. If you pay your balance by this much, and then you open up another credit card over here, and then you move this balance over to this new credit card, this will improve your score by this much. So I say that's called I have this much to spend, and it'll help us get your credit score up to a certain point that we may or may not be able to use for your mortgage going forward. So that's kind of cool how we can help you do that if you have bad credit and you're going to apply for a mortgage. And we can definitely help you even if you have a range of scores. And I would say the biggest thing to do is to start early. If you have lots of time and we can help you do this over time, it's going to be much more beneficial for you, especially if you have to borrow money down the road to be able to have your ideal credit score, because a lower credit score is going to cost you money over time. And I want to make sure that we have the most optimal interest rate that we can for you with the best credit that you have carrying into your new loan. Okay. So thanks so much for watching. If you have any questions, please make sure you reach out to me. I'll put my Calendly link down below. We can schedule a call and chat for 15 minutes about your scenario. And if you have any comments or questions about how you can improve your bad credit, I'd love to hear from you in the comments down below. Thanks so much for watching, and we'll see you on the next video. Have a good one.